Good morning. It's Friday, March 14th, 2025. I'm Zach Howard. Here's your 3-minute morning market update. Standouts from my notebook this morning to end the week. The Bag 7, formerly known as the artist of the Mag 7, affectionately named by Wall Street media. Not so much anymore. Lower lows, lower highs, continuing to intensify in that bearish trend alongside lower lows, lower highs, and bearish trends of both the S&P 500, the Nasdaq, and the Russell Small Cap. We are in a risk-off mode continuing. Further to that, volatility clusters. If you've been watching my morning notes, that's the hallmark of how I track markets and what we're looking at. And the S&P volatility, looking through the VIX gauge, it's had a greater than 20% reading now for 12 consecutive days. The chop of markets continues in this VIX reality of 20 to 30-ish range, where it's very challenging to be a trader if you don't know what side of the market you're on. We've had a streak now where a plus minus 1% move in the S&P for consecutive days that has only been exceeded 1973, 1974 bear market, the 1987 crash, the dot-com bubble, 2008 GFC, and 2020 March COVID. So we are in a particular place in market timing which historically hasn't been great for risk, and that is showing up in the price action. This is not a great environment if you do not know how to sail your sailboat in 50 knot winds. You probably shouldn't be going out with the family and enjoying a day on the bay. The S&P 500 is down 10% in the last month from its all-time highs, and that corresponds with those former points as the second fastest move in history. Volatility clusters, which leads me to bubbles. Bubbles are born out of central bank money printing. The 5-year anniversary of the last round, we are reaching it here today, and all those mega cap tech companies are now imploding. How does a bubble implode? Well, first off, bubbles, you want to be long of them when they continue to go up. As George Soros taught us, he sees a bubble and he jumps on. However, when a bubble stops inflating, it stops its momentum. It loses its bullish trend first, starts making lower lows, lower highs. Then it has a bearish trend. Then it goes bearish trade. Then the volatility picks up along with volume, further compounding that momentum of energy being lost and being pulled down. And that's what we're seeing. Do recessions cause the stock market to fall, or does the stock market falling cause recessions? In the modern age of fiat monetary printing and the capitalization of bubbles, I would probably err on the side of a falling stock market results in a lower wealth effect, which compounds a further slowdown in the economy and eventually a recession. I continue to think that the odds of that is increasing by the week in this backdrop of what we're seeing here, March 2025. So avoid drawdowns, risk manage your portfolio, be cautious of what the risk is out there. Gold is the opposite of these risk-off names, into all-time highs here, continuing to break higher lows, higher highs, bullish trend, 3,000 plus an ounce. Have a great week. We'll see you Monday.